Now, we also discussed this move on oil, so it's actually moving perfectly right now. We got into oil yesterday, and you probably remember last week we told you that the buy zones with oil were between $40 a barrel up to 44. Within that is our buy zone, as long as we get confirmation within that level. Now, what we did like very much was that we came down, retested the 61.8 Fibonacci retracement level, overshot it, then got supported, came down to lower end of our trend channel. You can see at the moment we're seeing oil ricochet between support and resistance. So you've got first of all, you've got 40 to 50 US dollars per barrel. We're within that range. And then within a tighter range, we're sitting between 45 up to about 48 as well. So we entered into a position on oil yesterday, which is so far, it's already up over 100 points, over $1 move in profit. Looks like we've got what is known as a 3 white soldiers formation, where you get the equivalent move over 3 consecutive days. So we're up and running, moving really well within this trade at the moment. Now, we've got the OPEC meeting next week, which is on Monday through to Wednesday, where there's anticipation of a production freeze, which will be very interesting to see how that works out. But prior to that, what we're starting to see is short covering. So traders who've had short positions on, they started to take those trades off the table prior to the FOMC statement and also prior to next week's OPEC meeting. So we're seeing some good momentum here behind oil. And we like this for further upside. So at the moment, I'm targeting in the short term, looking for a move back up to the upper end of the trend channel, 47, where we can look to bank a little bit of profits. But beyond that, if oil can get a move on and break above that trend channel, got the next levels at 48. And even beyond that, if we keep going, $50 per barrel would be the next zone. And then we can just trail our stop loss and to see how much higher oil can get before its next pullback, before it gets overbought. But that's been a nice opportunity to add. Again, fortune has really favored the brave in this scenario. The trade did trigger prior to the FOMC statement yesterday. If you didn't take any trades and you just stayed completely neutral prior to the FOMC statement, which some of you, which is absolutely fine if that's part of your strategy, but commodities are different to Forex. They're different to equities, and that often there's some really good opportunities prior to major news items. As long as you manage your risk appropriately and you know how to average into a trade and manage that risk, it's really worked out very well for gold, silver, oil, coffee, sugar. We've had some great trades on the last 24 hours, which have resulted in some windfall profits, particularly on sugar as well. Has been a fantastic move over the course of this week.